Hey guys, what's going on? Good morning, good morning. This is MC Fire.
Hey, Ice Cube.
Hey guys, we are coming at you today with a unique situation. In our new place, Q is leaving for her so-called place of employment, and I guess God had other plans. The gate stopped working. So, how do you feel, Q? You're not going to work today.
I know.
Yeah,
It's weird because I was like, I need to get out of here, but I guess I could take the day off.
I guess she's joining me today in the office, guys. So it's a good look. But yeah, we're diving right in, guys, because essentially with Q being here, you guys get a different look, different feel. It's always good having Q in the office with me in the morning, but it's a rarity. So it's like really a Friday thing only. So without further ado, you guys know that we have the Fed chair meeting today. If you guys have been watching last week's video or Monday's video, and the Fed chair meeting is today. So if you're a day trader, watch out. I know also that on yesterday, the jobs report kind of came in and hit gut punched the market. So yeah. Speaking of which, yeah, we're definitely affecting the jobs report here because Q's not be able to go to her job. Definitely affecting the whole market, man. It's crazy.
Does that mean that people shouldn't be trading today?
Uh, well, yeah, with the jobs report messing up, yeah, it's gonna be hard for. They came in worse than expected, so the market didn't like that. But now we have the Fed chair actually, I think, speaks today, or we have a meeting.
So
We'll
that
check it
means
out.
it'll be volatile.
It'll be volatile, yes, yeah, definitely it'll be volatile. Let's check that out. We got the forex calendar pulled up here, and I'll hop over. We'll switch cameras here. We just want to let you guys see kind of what we're seeing. We'll refresh it. But essentially, yesterday was a whole deal like the Jolts jobs opening to see like what's all there. It didn't come in like expected. But then you also have unemployment claims, which already kind of happened. So we can kind of view what the market is what the market kind of how they respond to that, so to speak. And then you also have the FOMC meeting minutes. That's what we're really concerned about. Unemployment claims, FOMC meeting minutes, right? I believe this is telling us that the jobs report or unemployment claims went down. So I think the higher the number, obviously you want it to be lower. So if it's going down, that's good. Stronger, healthy economy. Um, so yeah, we want to go and investigate that now. We're going to take a look at the bar charts. Whoop, whoop. Now, if you guys have been watching our channel for any length of time, we love this tool, not as a trigger to trade, but just kind of get a grasp on. We'll zoom in for you guys here. Not as a trigger to trade, but more importantly as a way to see what if the sectors are rotating, what they're rotating into, what they're rotating out to wrap out of, so that we can kind of get a grasp on what's going on with the different ETFs and which individual stocks we should be looking for our potential play. As you can see right now, uh the market is kind of peeling up in all sectors. So as of, let's see, 1/7, which is yesterday, the market was kind of peeling up. Even though some sell off, the overall market is extremely bullish. So let's go investigate. Let's go investigate that. We have a bullish outlook. Uh, we kind of have a bullish outlook here as well on the channel from Friday, right? From Friday's look and Monday's look, we definitely were a little bullish, and so we'll go take a look at that as it stands right now. The market. Um, let's go look. Here we go.
Woo!
Yeah, loving this new screen, by the way. Q. Thank you.
Yes.
Yeah. But essentially, as you can see, guys, Fed chair candle is that big giant red candle on the 18th. That's this guy, right? And then it kind of got us out of the danger zone, but not really making new relative highs. So let me mark that. Let me mark that out for you guys because it is kind of important. This is on the futures. We have it pulled up on the regular SPY, but there you go. So that's run rotational zone, and then the or level support level, and then we've got the all time highs here. We'll mark that out as well. Boom. So these two, this area is where we hopefully are not going to get a whole lot of accumulation. Maybe a double tap until it pushes higher. I am overall on the macro economics of things looking for it to be a little bit more bullish. But today, right, you have the futures as of right now. It looks like gold and silver, they might be pushing. Let's go take a look at that, and then oil. With if those things are pushing higher, that this does not necessarily mean that the overall market will probably push higher today. So we're seeing it as it stands right now. Pre-market, market slightly selling off with a slight bounce, respecting that level, but you could see a break, right? You could definitely say puts below 59.30 on the futures contracts. And then if you mark your levels, let's say your intermediate level, I would say this level right here that came and respected quite a few times. We'll mark that in yellow there, just as a level to respect for calls to complete rotation, right? Calls above this level right here at 59.90. That's kind of really where I would say, hey, just watch out for that. Calls above that, puts below that 59.20, 59.29 level. If you could do puts below that, and yeah, just watch for that. Other than that, I would be looking to take plays off rotation and kind of move forward from there. So also, let's see Bitcoin. So for all you crypto guys, let's go take a look at that. We'll start on the weekly and the daily chart. Just kind of get a overall picture. The day before yesterday, kind of sold off. Nice red candle there. So we're looking for something a little bit more like this that we can put a play in to the upside. Um, Bouncing off the support level. We kind of wanted to bounce off the support level or take kind of more of a dip. Didn't get a very healthy dip, but it is what it is. We wanted to come down and pick us up. Ethereum threw a very nice dip though, but didn't get back to where we would like to see it, which is at relative highs. So we'll go ahead and mark Ethereum up and Bitcoin up as an alert there. But the reality is we do want it to be more of a dip before we like to take a buy there. So that's kind of where the market's at. We'll go take a peek at the Qs, and we'll just see what it's doing after hours. Like I said yesterday, definitely took a drastic pullback there, right? But this year we've been crushing the Qs. So and it's currently, over here we don't necessarily believe in using trend lines as a trigger, but it just kind of shows gradual buying pressure, right? So the trend line for the Qs has been upwards, bottom left, top right, and we hope that continues. But in the morning right now, currently below that support level, so it's a little bit of a danger zone. It's already broken below. It is retesting, so failure, high probability of it failing to the downside. I would already be looking for puts below 516 because it already retest, and you've got negative moving average cross here, so definitely something to watch, right? We've got the 10-minute on the left, right? And then on the right, you just trade it very similar to the way you would any other stock, right? So if you look back here, you've got double green. And then at this point, now you've got double red. So you're looking for, let's say if it's double red, you've got this green candle that shows its head here, double red, green. And then as the green gets washed, take that position potentially to the downside. It does fail down to the support, so you do actually net a very healthy profit. Okay. Just something to think about there. There's we day trade just slight bit different, but the rules kind of track about the same. Okay. If you identify the overall trend of the market and then you see a setup candle, you can potentially get in or reverse off of VWAP, reverse off support, reverse off resistance. You'll see the setup candles the very same way if you get a buy bias or sell bias play. You guys, we've talked about that all the time. IOU all day. Identify the trend, right? Look for an outsized candle, and then you take the trade according to your risk management and your plan, right? Do not break your rules. Bend, don't break your rules for sure. So we'll take a look at some plays now, though. Okay, we want to look at first. We're gonna go to the charts here. Let's look at XLK and XLC because those have been kind of really good plays or good setups, right? They're still in technically in play. So the XLK play, if you took that play, it actually already went up to where you would like take profits off the table or make a decision, right? Whether to roll or make a butterfly. Would have been a really good butterfly play. Didn't put that on, but we did put it on an XLC, but has since pulled back. Remember, this it's now heavy due to these reports. So maybe this new report today can bring the market out of a rut. We will see, right? XLC also was same thing. It was in play, also very similar, pulling back, but showing a little bit more relative strength. It hasn't pulled back all the way down to the support level that you would think it would have pulled back to, as where the XLK did. So a little bit more relative strength in the XLC. We'll see if that holds up. And we'll move forward from there. Also, you've got we've been watching AMD and ASML as potential value buys. Those are still kind of in effect, right? But of course, if the market's pulling back, be cognizant of that. You've got this um, support level here where you did see an inflection, some increased buying there, and then it actually started the rally up to this rotational zone. So between these two levels would be a good look. But remember, we want kind of a little bit more a little we want the push to be a little bit more defined before we just you know back the truck up and really get a whole bunch of shares of AMD. Same thing for ASML, the chip makers, right? With the chip makers, definitely a pretty juicy rally here. Actually, the moving averages are a little tight, but here's a problem. ASML is in a downtrend, and now we have a setup candle, an outsized candle here. So look at that. So it could be a potential downside play. Now, if you notice, if you look at times past, right, that's exactly what happened. This red line that we marked on our charts on the daily side, on the right side, that indicates a new downtrend on the weekly chart, right? So all I do is, and I'll show you on the weekly chart, we'll mark that. That'll be where the moving average crosses to the downside on the weekly chart. So we want that to be represented over here on the daily. That's what it is. And if you notice when it rips, these are good opportunities to take the downside play. Same thing for right here. When it rips, good opportunity to take the downside play, right? And you see the candle sticking itself out here. It's very outsized. It's out in the open because it's on the wrong side of the tracks. We use that as our target for break below the low. If it pushes, then you can enter the trade with stop out at the high or at minimum be a 2 bar professional. So my stop would be at if I was 2 bar professional here, it'd be at 892, right? No more than 2 bars. That's about it. That's all you need. And then right here, same thing. Failure, stop out at the high, 2 bar professional. 2 bar professional is a little harder. So I would just give it a little bit wiggle room to 801.99. That's about as much as I would give it there. Okay. Those are the two potential value buys that I'm looking at. We also took some profits on GEVO. And had a very juicy run. I hope you guys were able to lock into that and lock your profits. Remember, we told you guys to set an alert above the setup candle and went within 4 days. Also, there was a squeeze on the board. If you look at the bottom, this is the squeeze indicator. Shout out to John Carter. And what John made was kind of a really cool momentum indicator. But his momentum indicator isn't to show you that momentum is extended, it's more to show that momentum has subsided, and it's a area of low momentum, low volatility, options premiums being cheaper, and it's you're getting in at the start of the race and not while the race is in motion. So GEVO we bought here. First sign of a potential to take profits off the table. We did at a resistance level. This is trading 101, guys. Get to play, take it off at the first sign of resistance, take part off at the first sign of resistance, and just kind of wait what happens, right? So GEVO, definitely a good look there, but it is pulling back with the rest of the market. So we'll just have to watch it for any other potential. We also took profits on XLE, had a kind of had a rotational play there. So essentially, it got down really low to the rotation, and we went on and we did actually execute a play there. Completely love to catch some rotational plays. We don't get them too much because it was rotation, and we saw that buying was in effect, and it gapped above this. It works the same way, right? Outside candle identify the trend. The trend is rotational. Outside candle is right here. It went above that. We took the buy, stop out at the low, and then 3 weeks later, gotta let it go. Shout out to us, right? And so very, very healthy profits there for XLE. So we are out of that. SoFi, let's check that out because I know a lot of people are looking at SoFi. That's been the talk of the town here. SoFi kind of pulling back. Kind of slight, it's a slight pullback, but so you're taking some heat if you got into that position. And then this morning, I guess with the overall market pullback, you're gonna take some heat, but stick to your plan. And essentially the stop out is below the low, right? Of course, we're targeting the highs. You have a butterfly or vertical, that's perfect, right? Let's continue. We do have we already took a look at Bitcoin, Ethereum. Let's go look at light sweet crude real quick. So let's see. Light sweet crude, right? Did break above its long-term trend line, did also show new trend. So what are we looking for? You got a new trend, you're looking to buy the dip. That's what we're looking for. If you got a trend on the upside, right? Brand new trend here. We'll mark it out for you guys. If you look on the daily, that little blue line popped up. We're going to change it to green to represent, hey, this is an uptrend, right? We have a green cross. So shout out to us on Light Sweet Crude. And what does that mean? Essentially, look back and see if we can buy the dip. Buy the dip. Was there opportunities before to do exactly that? Well, absolutely. So you see this opportunity here. You do get a slight stop out, but it does end up running. That does happen. Same thing here. As it comes down, takes a dip. As it breaks above, you take the buy. Nice, healthy, juicy rip, right? I think that's pretty good for 1 for 1, right? You take this very small stop out here for this candle, but you get multiple days of it running to the upside to counteract that, right? Same thing to the downside. You have a position here, right? Definitely takes a follow through rip down there, especially if you're being a 2 bar professional. And that's about what you get. So we're looking for a slight dip here and then maybe an outside candle. We take the position to the upside. Just something to keep in mind. Light sweet crude, new trend. Watch for that for sure. We've got ELV. And then we'll take a look at some NVIDIA, right? ELV extended downtrend, but running into resistance. So be careful, right? It's been really, really just straight shot to the downside. Things that get a little too extended have the potential to reverse, right? What I don't like to see though is that your 8 period moving average. It doesn't even pull back to it, right? So reversion to the mean trades, this thing is really, really selling off. So just watch out there. Downwards trend and could reverse, but we would want to see a little bit more healthy of a pullback before we short that rip. Our favorite, crowd favorite, NVIDIA, right? Large market cap, massive, massive candle to the downside there. So the good news is though, right? If anybody who's been tracking us for any length of time, we do have leaps all the way back from the 98 zone all the way back here when it made that major pullback. We got leap like a leap contract, which we've already rolled up to this 151.06 level. Because it's at the 151.06 level, these went in the money yesterday, and I was like, oh wow. And then it does this, right? So definitely watch out for any potential plays. I would say with these outsized candles, there might be something going on other than just the meeting. Okay. But halfway up is pretty good, right? If you get halfway up, this pullback is you could divide this one candle into thirds. So if it pulls back into the upper third, continuation to the downside is highly a lot more probable, right? If it pulls back to 50%, it could pull back to the pivot zone, but continuation is a lot less probable. If it breaks above that and gets in the upper two thirds, then I would consider that as a very bullish position for the play. Also, with increased buying pressure, we could see Nvidia, and it being a name brand, we could see Nvidia really pushing, right? As it stands right now, I think the bid and the ask is above market value from close yesterday. So definitely watch out for that. See, it's already kind of pushing up above that zone. So we're looking for it to get above that upper third. If it doesn't get above the upper third and you start to see it reverse to the downside, follow on is definitely in effect. So puts would be below 140, 69 for sure. If it pushes in the upper third and it continues to the downside on the break of 141, hey man, let's go. There's also other setups if you're on the daily, if you're on the like the 2 minute or the 1 minute, whatever, those plays are also in effect to the downside in the upper third too. So you can kind of front run the gun, but I would rather take the break, me personally. That's just me, but that's something to watch out for. We're not going to do it today, but yeah. So we've got T-Mobile also in play. We'll go look at that on the daily, weekly, right? Potential new trend change here coming soon. But what we do see is currently it's still green. So we'll act according to what we're seeing on the information on the charts. We're not going to just go by our gut. Nothing really good comes from your gut. And so marks above 215.12, really 215.12 is what we're looking for, right? If it gets above that, you could see a nice healthy rip kind of to continue the uptrend, right? Healthy pullbacks are good, right? We like to get in stocks at good prices. So as long as it's an uptrend and it meets our criteria, we're going to be a two bar professional. In this case, our stop would be below 207. If I can get to my mouse there, 208.38. So if it can break the low of our outsized candle, then we'll definitely let it go. But if not, then we'll hold it potentially to this zone right here, the first zone to make a decision, that 235 at this pivot zone right here. I'll mark it out for you guys so you guys can see what I'm seeing. But essentially, this is my first level of resistance. Granted, this is on the daily. Normally, I take weekly resistance, but just so you can see that, right? It is actually on the weekly as well. So it pulls back, very, very healthy. And then you could also take the on the high there, you could take that. If you're a little bit more aggressive, that could be a decision area as well, right? So we just want to be cognizant of that's what's going on, right? You also got to think too, there's a gap on the board for this. So with this being the rotational zone here and it being below that, couple of dynamics in play, right? One dynamic is it fills the gap to the upside, gets above that resistance for new support. But if it gaps and goes, we could be looking at a new downtrend. So keep both of those in mind, right? You want to hope for the best, plan for the worst, but hope is not a strategy. You stick to your plan. If you decide to go positive, you just try to go get calls or vertical or butterfly, call butterfly. Stick to your plan. Keep to that stop. If you trade it to the downside, right? You're looking for rotation. Stick to your plan, right? Whatever your plan is, stick to it. That's really what we kind of harp at this channel, right? You can be wrong. We can all be wrong in the market, but what we can't do is be dishonest to ourselves. That's the major thing. Do not be dishonest to yourself, right? For sure. We got XLRE in play. Let's go look at that. XLRE, kind of same thing. Uh, Same thing, right? Really big push. Supports right here. It's not getting above support. It's fighting to get support. You got some outsized candles right here. So if you take this play, right, definitely stop out above 41.21. Look forward to complete rotation down to 36. I know that's asking for a lot, but I'm telling you, it could definitely do it, right? the housing market has been kind of hit kind of heavy because loans are just kind of harder to get. Interest rates are in the stratosphere. So, and then people are having a really hard time buying homes. So, if you don't already have one, I don't blame you if you don't want to get one in the next 2 years, because interest rates are crazy, right? The market, the market's kicking off in about 30 seconds. We'll keep this thing pushing. I think we hit SPG and Comcast next, and then we'll do one more SPG. Simon Property Group, more in the real estate sector as well. But this one's I'm kind of more thinking about it to the upside, right? We're hoping for a break of that 176.73 level, 176.73 to the upside, right? Currently it printed to the downside because the market just opened, but we were looking for that break above that level with a stop out, whatever pivot low. We're gonna respect all our buyers there, right? The market is opening a little heavy. I'm seeing a lot of red on the board, and the defensive sector is up in play. Also, you got to think about the VIX is up about 5%. So, I guess a market digesting that information not too well, right? We over here on this channel, we don't really necessarily care about about what's being put out in the news. We care about how the market reacts to the news, and we want to act accordingly. So it's really less about what's going on in the news and more about how the market digests that news. Okay, so just keep that in mind. But yeah, it calls above that level, 176.73, and then below that, we're not looking to take a position. Moving right along, we'll do Comcast here. CSA, boom. Comcast is also in play, right? Probably printing lower. It's in a downtrend, and as you notice, downtrend, green outsized candle, and then it starts failing, right? Definitely could see it running down to 3 ATR there. So 3 ATR is potentially where I would want to pull that out. 3 ATR is 34.73 before you might see a bounce, right? Unbalanced volumes also to the downside there, if you notice that. But yeah, it's been running and it might keep running. This big giant red candle in the day just tells us that, and this is not the Fed chair candle. This is it screaming for help, right? And it's not getting the oxygen. So definitely in play to the downside for sure. XLU is also below, right? So we just got an alert for XLU. Let's go hop over there really quick. We're gonna hop over to XLU real quick. Shout out to XLU. Yep, downtrend. Let's see. Oh, break of this. Yeah. So if you are looking for a new play, you could take the XLU, the 75, 70, 75, 67 put, right? With a stop above the high there. I would get it for about 3 weeks. Look to take it off at this rotational zone right here, or make a decision. That's what I would be doing. And kind of the trend is in effect, right? You've got this downtrend, you get a slight rip to the upside, you get an outside candle there, and then you make a decision. That IOU, same thing we've been doing. You make a decision to the downside on what you want to do with this. But this as a sector, your utilities is in trouble. So just keep in mind it isn't a current downtrend, right? This is how we identify downtrends over here. So over here, we think it's in a downtrend. Okay. So shout out to XLU. Actually, we'll put this on our notes over here, so that we can keep that on our list. We also have a EPR. EPR. Let's go look at that. EPR. So, but the one thing I do want to note, right, with EPR, watch out for a divergence. So divergence here is in play with the unbalanced volume. The unbalanced volume is over here. If you notice on the weekly, it was making a lower low, right? Here's a pivot low. Here's a pivot low, right? Pivot low here, pivot low here. Now on the unbalanced volume, the indicator below, it's not making a lower low. These are about even. So now, as you can see, as the unbalanced volume starts to go green, right, crossing above the 64 period moving average on the unbalanced volume, as it starts to go green, right, we could see a reversal. So keep that in mind, right? We love to see divergence plays. We don't get to see them too often, but when they do happen, really, really nice rip, right? Nice outsized candle here. I think this is the Fed meeting candle, and it's already crossing above that. So, but there is some like there's a play to the downside, but also watch out for divergence. So, you already get a neckline break on the divergence too. So be careful. Don't necessarily, I would say, more caution on EPR to not take the play to the downside at the break. It hasn't broken as is. So just keep that in mind, right? If the market's heavy as is, the market, think about this. The market is heavy and this thing is going green, right? It took a dip already and it's already pushed back up. So keep that in mind, right? Just watch. Be very, very careful, right? Trade your stop tight if you do get this to the downside. Trade it tight. So what does that mean? Don't, in other words, here I would not be looking to be a two-bar professional. I would not be looking to take this off like up here or something. I would look to just take it off if it breaks highs, right? If I was getting puts. If I'm getting puts, don't be a two bar professional. I'm being a one bar because you got the divergence right here. And it's looking kind of dangerous, right? So since we got Q here, let's see. Q, is there anything you want to look at? Any stock you want to look at in particular?
Um,
Hmm.
well, how's the dollar doing?
How's the dollar doing? Great question. I love that question. We'll go UUP. Let's start there, right? Dollar index. Dollar, very good question. So if you look at the trend, it's been up for the dollar, right? Very, very healthy pullback here. And so we put our there was actually a trigger to get in 2 days ago. So if you're in the dollar trade already, uh shout out to you. You're already in profit of about 50 cents. Good stuff, right? The dollar is doing pretty good. In profit about 50 cents. I would definitely want to see a break of 29.69 for that gap fill if the dollar is going to do that. But as you can see here, the dollar tracks a little different, man. Like when it takes this pullback, they are nasty, and the rips are even nastier. So watch out for the gaps on this puppy, and act accordingly. Right, set your risk accordingly is what I'm really trying to say. This pullback is healthy and is slightly trading up, but you can definitely see the gap here kind of came out of nowhere. I don't think this was on the Fed chair day. Let's see. Let's go back. Yeah, it's on the 20th, right? So 2 days after that Fed meeting, the dollar does kind of the opposite of what, because you got to think, if you're pooling dollars, you're taking money off the board, right? You're risk off at this point. So on the Fed chair day, when the market is selling off, the dollar is pushing higher. And later, as the market rallies, the dollar sells off. Pretty amazing. So that it really kind of tells you it's kind of also like, hey, are people putting money on the board or are they taking money off the board as regards to what they want to risk? And speaking of risk, let's go look at fear, and then Q can tell us at least one more before we call it. So if the fear indicator right now is definitely screaming, it's up around 5%, guys. So watch out on today. It's definitely going to be a heavy day. But this also means that if you've got positions to the upside, don't freak out because the whole market is going down. If you're going down with the market, then that's fine, right? It's on those days when the market's going up and your positions like your stock is going down, that's when you have to be a little bit more leery, okay? So good call out on the dollar. Very nice. What else you got? We
Um,
should have you in here more often. You should skip work, break the gate more often. We can break the gate more often. What else you
what
got?
what about those people who are worried about trading, so they just put their money in the SPY? What the SPY do?
Okay, very good question. So let's say, for example, you're not looking at options. That's basically what Q is saying. You're not looking at options. You're not looking to be a trader. What's the overall outlook of the market? Great question. Great question. Okay. So historically, if you don't want to be a kind of a trader guy, like look at the market every single day kind of thing, right? I'm gonna pull this chart up. Very nice chart, right? This is going all the way back to 09, 08, 07, 06, right? This is what I want you to know, right? Even in hard times for the SPY, putting your money in something and just letting it sit is probably the most effective trading strategy that there is. So just because you see people getting these crazy returns in Bitcoin, these crazy returns in meme coins, crazy returns in trading options, a lot of times what people aren't showing you is their losses, right? 80% of people fail trading. So if you want to be successful in this game, Q asks a very good question. This is a profession. This is a skill set. So if you're not looking to acquire the skill set, buy and hold these dips, right? This is when you need to leverage in and say, hey, we're going to live slightly below our means, save some money and put more money into the market when it's down. When it's up, ride it to the upside. But while it's going down, don't be afraid to put money into it. That's that faith factor that you have to have that, hey, do you see this chart? It's bottom left, top right. And what we're looking through is multiple recessions here, if you think about it, multiple crises here, rate hikes as well, right? All that going all the way. How much turmoil has happened since 2005, right? And here we are in 2025, over 20 years. How much crazy stuff has happened? You've seen, look at all this, look at this V-shaped recovery right here, right? These are interest rate hikes right here, right? You also have some pullbacks here. So plenty of opportunities to take buys, some deep pullbacks. Imagine if you got in on this pullback, right? Even right here, nothing really lasts forever. This was down for an entire year, right? And so from 2008 onwards, it just started to roll up. And that's kind of what we're really saying. Can you stomach those longer term, like 1 year, 2 year downturns? Really know in your heart and faith, hey, I keep putting my money there, boom, 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 boom. And then it might take 1 year, it might take 2 years, it might even take 3 years. But when it recovers, it's going to be beautiful. And you are going to be prepared, laughing to the bank while everybody else was saying, man, I should have bought it at XYZ. You hear it all the time. If you would have bought this back here, well, when it was back there, you should have been buying it. And you heard it here first, right? In Q, actually a very, very good question. So we love that. We love having Q on the channel. Jeez, Q, we love you having you on the channel. Freaking flipping awesome. But guys, thank you. We're gonna go back to the screen over here. Thank you guys so very much. We appreciate your time, love, energy on the channel. If you guys are traders though, stick to your plan. IOUs then definitely full effect. If you're not, if you're just buy and hold, that's a plan too, and you have to stick to that, right? Your plan has to be I let time work for me, right? Whether it's dividends, don't tap into it for an emergency, unless it's like a dire emergency, like life or death, right? Other than that, I'm not like figure it out, right? If you could do that, man, you will see crazy growth. We've seen crazy growth in like the last couple of years, and really all we did was just most of our holdings are buy and hold. A certain percentage is trading. So that's why also we don't have to put a lot of pressure on like trading, right? We just found something that works, and that's something that I gave myself as a passion for. And then Q just giving some huge, great advice. Freaking awesome.
Well, because not everybody want to look at the markets every day and they don't know what they're looking at. Some people are just like, I want to invest, but I don't even know where to start.
Yeah.
So, yeah.
Start with the whole market. It's been going up since
Because you
yeah.
said that yourself too. You said that if you were to give people advice, like go with the SPY and just continue to invest in that, just dollar cost average in, because it's better to put your money with something that's going to grow at least 10% every year.
Yeah.
Like it's had a return
Yeah.
of that. So
Whenever you hear like fear in the market, I will say this. I'll give you guys the best advice you can get, right? In the markets, bad news is good news. Okay. That's you can take that to the bank. In the markets, bad news is good news. If you hear bad news, go check out the markets. Maybe it's time to buy, right? Oh, Boeing, real quick. You know, let's go let's go look at bad news is good news, right? And we want to kind of bring Boeing to the front of the class here, for that same occasion, right? So we'll zoom out just a tad bit here. We have to probably zoom back in, but Boeing had some bad news, and Boeing, because of the bad news, sold off pretty drastically, right? And so we started seeing Boeing sort of pull up here in this rotational zone for this is a weekly chart, so a couple weeks. So we were like, okay, cool. We'll take a buy and we'll take another buy. Right now, currently, we took a buy on bad news as opposed to great news, right? Good news, like record highs, earnings, right? New products. We took a buy on um the worst of the worst. Yeah, I'll let you guys do the research there. But right now, our patience has paid off. So letting it sell off, and you're still using what we've learned, but focusing on bad news in the markets is more important, right? So we focus on that bad news. Here it is. This is one buy. Here's another buy, and it's above them both, which is really good. Other more bad news, UNH, we kind of focused on that for a potential buy, and we did get that buy, and it is also above that, right? Remember, we're doing the reversion to the mean trade. So one, if you notice, one is a longer term buy and hold trade, and the other one is an options trade. We've talked about the United Health, and it had bad news, right? The bad news, everyone should know what the bad news is for United Health. Their CEO got deleted, unfortunately. I feel, we feel bad, but the markets is what it is. Bad news is where the opportunities typically come from. That's all I'm really trying to say. Bad news is where the opportunities come from. So if you can see that it took a dip off that bad news, right? The company as a whole, can it recover? That's really what you're investing in. Can the company recover? Boeing was failing, right? Boeing was failing. Can it recover? Well, they stop striking, everyone goes back to work, it starts to recover. Same thing here. United Health, are they going to reframe how they do business? Then the company can recover. That's what we want to see. It makes a healthier market, and you have an opportunity to buy the dip. So there you guys go. Thank you guys so very much. We have Ice Q over here. Love it. And MC Fire. You guys are awesome. Key, you want to tell any people any words of wisdom since you're just dropping straight nuggies?
Just be very careful what you're doing. Like, we're not giving financial advice,
Oh yeah, for sure.
so just be sure to, I don't know, use your rules, make rules, use your rules,
Hmm.
and even consult with um a financial advisor if you need to.
That's exactly right. We're growing, we're learning, and we're definitely not trying to tell you guys what to do with your money. It's your hard-earned money. Do with it as you will. But we love this profession. We love the education part of trading. So, guys, this is your boy MC Fire.
And Ice Cube.
You guys have a wonderful day. We'll catch you on the flip side. Maybe Q can get to work here. I don't know.
I know. I hope.
You guys,
Shalom.
shalom, peace, y'all.